welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from these streets, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. We'll get you expert views as well to find out where exactly can you make money in the markets which are nearing the record high levels again. So let's look at the movement right there over there. When we talk about the Nifty 50, it's up by 26, 27 odd points at 19,738 off the high point of the day, but still hovering near all-time high levels. The Sensex again 155 points higher in trade at 66,740 odd levels, just about a 0.25% jump right there. The broader markets, let's look at the mid-cap and the small-cap indices. Yesterday they were doing far better than the benchmarks. Today they've come under pressure. The small caps down by 1%, so profit taking completely. Mid-cap 100 index down about 0.3 odd percent. Even sectorally, barring the IT space that's still hovering with about half odd percent gains today, and the oil and gas space that's about 0.25% higher, rest of the sectors largely have slipped into the red, with banks absolutely flat in trade today. So it's the IT pack that is shining the most, the oil and gas also holding up at some gains currently. Now when we talk about the top Nifty 50 gainers at this point in time, the stocks of course from the IT pack are making to the list. So you do have stocks like Infosys leading the rally today, almost 1.5 to 2% higher in trade. From the banking pack, it's ICICI Bank, consumption-oriented space, Asian Paints buzzing as well, 1.5% uptick for this one. You do have NTPC, Power Grid, power stocks up in trade. Bajaj Auto has recovered from yesterday's losses, so half odd percent gains coming in on that one too. Tata Consumer Products as well. On the downside, however, pressure being seen across the board again. So you do have stocks like Hindalco, that's down in trade, Divis Laboratories, Bharti Airtel, some of the heavyweights right there that are pushing the index down. But let's welcome our guest on the show. Mr. Avinash Gorakshakar joins in, Director Research at Profit Mart Securities. Welcome, sir, and thank you so much for taking the time out. Well, it's a market where largely nobody's complaining. You know, the growth investors are making money, the value investors are making money as well. Those who have classic compounders in their, portfolios, even they are celebrating at this point in time. I want to, see what is your sense when the markets are hovering these at these all-time high levels? Is it getting a bit frothy, or do you believe that the bull run is here to stay?
Yeah, I think first of all, thank you, Sakshi, for inviting me. I think the markets are, extremely buoyant, largely because of the liquidity flows which we are getting from the FIs. In fact, in the last few months, I think since April, since the market started rising, we have been seeing that Indian markets have attracted a lot of liquidity from these foreign institutional
Yeah.
investors. And I think today we had hit a high of 19,800. After that, there was some profit booking. But my sense is that, if corporate results are better than expectations and, the Fed policy, which is due for July 25th, if there is some mild positive surprise in terms of the commentary from Mr. Powell, then I think the markets could head to higher odd levels. And I think we should not be surprised. The markets could possibly even look at touching 20,000 in the very near term. But I think it would be a gradual journey from here on.
Okay, so what is the best way that one can maximize returns and profits in this summer rally of 2023?
I think one has to be extremely selective, Sakshi. Now, I think is a time when most of the stocks, whether it is a blue chip or a mid cap or a penny stock, all these category of stocks have multiplied. And now the time is very important for investors to actually look at only quality stocks and quality businesses which have got the kind of earnings growth trajectory with them.
Yeah.
So I think within this space, you could look at automobile companies, capital goods companies, real estate companies, and I think all these stocks have to be purchased, at mild corrections. The markets are always going to give you these opportunities. So I think an SIP approach or maybe a buy on decline approach would be a better opportunity rather than buying at peak level. I think it's better that new investors wait for some mild corrections and obviously then start building their portfolios. But yes, I think they should not ignore the markets completely because
Mm-hmm.
the buying momentum is unlikely to go down in the very near term.
Okay. When in a market where everything or every sector has seen a rotational buying at this point in time, any contra buy in the markets that comes to your mind?
I think we would be quite positive on the pharma sector, and obviously here we believe that there could be a lot of value, especially from the formulation companies as well as the API companies. In fact, this is one sector which has already started seeing a lot of accumulation. So I think within the API basket, companies like IOL Drugs, Supriya Life Sciences, Aarti Drugs, or for that reason, large players like Sun Pharma or maybe a Torrent Pharma or a Lupin. these are all available at attractive valuation. So I think one investor who has got a contra view and a slightly longer term time frame in mind can definitely start nibbling in at the current odd levels.
Got that. And what's your sense with the IT pack? Are you still surprised with the kind of move that we've seen over the last few days, especially on the back of muted set of numbers from most of the companies that have come out with the earnings?
See, I think clearly what the market has liked is that despite margin pressure, I think the order book of all the IT companies is pretty robust. And I think that gives a decent amount of revenue visibility for these companies. The best part is they still have a lot of cash on their books. It's an asset light model, as I've told earlier. So I think, companies like TCS, companies like Infosys, I think definitely there could be good growth provided the investor is willing to take a long term view.
Yeah.
Infosys has announced a very large AI order. So I think, as long as the order inflows come in, you're going to see a lot of excitement around IT companies. But yes, you need to stay invested here for a slightly longer period of time.
Okay. What about the banking space, especially after HDFC Bank's numbers, IndusInd Bank numbers are today as well, from the private banks and the PSU banks? What is your expectation as far as the earnings season is concerned?
Yeah, I think the banking sector is going to perform quite solidly in the quarter one of FY24. I think we saw HDFC Bank numbers, a very strong growth in the gross income, very strong growth in the profit after tax, and a very strong asset quality number, which was maintained on a still higher base. So I think, you're going to see good numbers both from the PSU as well as the private sector banks. In fact, most of the small finance banks also could show very strong numbers because clearly, the credit growth, in the system is pretty strong, 12, 13%. Corporate capex is building up, retail demand is good. And I think clearly banks have cleaned up their balance sheets in a very significant way, especially as far as the public sector banks are concerned. So I would believe that this is going to be a strong period for most of the banks. And I think any decline or any correction, because we saw today the bank nifty correcting sharply, I
Yeah.
would believe that it's a good time to accumulate quality large cap banks, in your portfolio.
Got that. How about the valuations at the current levels where the markets are at record highs compared to what we saw in the December 2022 peak? How are you judging the valuation part?
Yeah, I think on a very broader basis, if you look at the index, Sakshi, I think the P multiple is about 25 times. But if you look at the broader market, there are many companies which are trading between 12 to 15 times 1 year forward earnings. And I think you need to look at such companies where the valuation is in your favor. Clearly, the earnings growth trajectory is at least 20 to 25%. And I think where order book visibility is very strong. So I think, as I mentioned to you, sectors like capital goods, real estate, automobiles, building products, these are typical cases where we could see a lot of re-rating happening.
Yeah.
Broadly, I would believe that wherever the stock has topped out or where the valuations are slightly expensive, and I think a classic example is DMart, which came out with very
Yeah.
poor. I think these are companies which I think could give a big negative surprise to investors because these are already trading at fairly expensive valuations.
Okay, understood. What is your take on OMCs, sir? Most of them hit 52-week high levels in the early part of July. How do you look at this space?
Yeah, I think oil marketing companies should also do well in this quarter, considering that crude prices have been soft. A large part of the crude has been sourced from Russian oil. And most importantly, two important sectors, the automobile sector and the
Yeah.
aviation sector, we've seen a very strong volume growth. So the throughput for most of the oil marketing companies is going to be pretty strong. Largely, inventory losses are now thing of the past. And I think as long as there are no cuts in the regulated prices of diesel and petrol, I would believe that this quarter also should be a good year. So, companies like IOC, BPCL, HPCL, I would believe you could see very strong quarterly numbers coming in the Q1 of FY24.
Got that. We've spoken a whole lot of about several sectors where there are opportunities in this current market setup for the investors. But as a strategy, I want to understand, a whole lot of investors either are feeling FOMO because they did not participate in this stunning rally of the last 3 months, or those who are already invested are sitting on profits. They do not know what should they be doing at this point. If you could just help break what is the right way to approach the market right now, what should one do and what should one not do when the markets are at record levels?
See, I think for investors who have participated in this rally and have made a decent amount of profits, my suggestion is that this is a very volatile market and we are going to see higher levels. But in the intermediate, it's always better to book your book profits regularly because that is how you can secure your margin of safety. So I think at least once your capital is recovered, then I think the investor is at ease, whatever index level the market throws up. So that strategy, I think investors should do. They should not stick only to paper profits. They should convert them to some cash flow Secondly, for investors who want to enter the markets now, I think be careful about penny stocks and companies, which are not tried and tested. There are many companies which are, running into 52-week highs without any track record or balance sheet strength. So I think focus on quality, focus on the promoter, and look at the sector. I think clearly the sectors which I mentioned are all sectors which probably could show very strong earnings growth for the next 6 to 12 months. So I think you need to be little selective at this point of time to ensure that you get a decent alpha in the next 6 to 12 months.
Got that. Just one stock that I wanted to discuss today, of course, emerging as a mid-cap stock of the day. Sheela Foam shares have skyrocketed today again as it has secured stakes in both Kurlon and Fulgenco. How do you see the last 2 or 3 days move on the back of this news flow, and is there still steam left on the stock?
Yeah, I think as far as valuations are concerned, Sakshi, the stock is fairly expensive because on a standalone basis, Sheela Foam used to trade at a multiple of almost 60 odd times. Now, having got Kurlon, they would definitely enjoy a large market share of almost 40% in the overall business segment.
Yeah.
My sense is that on Wednesday the company is going to have a conference call. They are disclosing its strategy going forward, not only on the funding side but how they plan to ramp up the operations. So I think clearly investors should not immediately jump in. Of course, those who have the shares can hold on, but typically I think wait for a mild correction to enter the stock because longer term prospects are positive, but in the
Yeah.
near term the stock has actually run quite significantly.
All right. One more comment, and then we'll wrap up the show. And that's on the Adani Group stocks now. The AGM is on. We've heard Gautam Adani also speak about and lash out against the Hindenburg allegations this time around. They've talked about the renewable space as well and the plans going forward. The stock definitely buzzed higher at around 2,500 also in the morning trade for the group flagship firm, and the rest of the stocks are also in the buzzing zone. How do you approach Adani Group stocks now?
No, I think clearly, I think Heidelberg is now a thing of the past, Sakshi, and I think things are back to normal. The company managing director, that is Mr. Gautam Adani, has clearly said that the balance sheet and the financials are possibly in the best possible shape as of now. And I think hopefully, if the earnings trajectory continues, then I think you could see a significant amount of re-rating even from these odd levels. Plus the fact that now a lot of large institutional investors like GKQ have come and invested in the company gives a lot of confidence to the retail community as well as the domestic institutional community. So I think you could see a lot of positive surprises coming in, but please mind that these are volatile stocks. We have a lot of external and internal factors which could play havoc, and volatile market conditions could happen in the next 6 to 8 months. So only investors who have a high risk appetite should actually buy these stocks because it's not going to be a one side rally. You could see intermediate corrections here also.
Okay, understood that. Well, many thanks, Mr. Gorakshaka, for being with us on the show and discussing all these insights with all our viewers. Always a pleasure having you with us on Business Today TV. The markets are still holding their ground, about 188 points higher on the Sensex at 66,773. The Nifty is hovering 32 points higher at 19,745 right now. So still not giving up all those gains that they garnered in the morning trade. But let's see how the second half of the trading session really pans out, and if there is additional participation apart from the IT and the oil and gas space in the second half that continues to give buoyant support to the markets as well. So we'll continue to track the market movement, and you can be with us too to track the same. And so don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms like Facebook, Twitter, LinkedIn and Instagram.